little earlier, I sat down with the CEO of American Heart for Gold, one of our proud sponsors on the show, to talk all about the reasons why we're seeing gold climb into new highs. What's really driving this? He explains. You know, we talk about gold nearly every day on this program, and we've been watching it go up, up, and away. We got a lot going on now with the central bank, with inflation, with central banks all over the world, actually, looking to get into gold. I'm thrilled to have back on the program Max Baker. He is the president of American Heart for Gold, one of our proud sponsors that we have here on the Trish Regan Show. Max, good to see you.
Great to see you, as always.
So, inflation is here to stay. I just saw an article crossing my desk the other day that India has bought more gold than ever before. We see nations around the world in this sort of great divide, you know, having just come off NATO, et cetera, in the big meeting with Russia trying to pull away, with China trying to pull away, with India trying to pull away. There was a photograph of Modi and Putin recently embraced. I mean, all of this, I think, is contributing to the rise in gold prices that we're seeing now. I guess I would just ask you what everybody's wondering. Can it continue?
Yeah, you know, as long as they continue to print money the way that they are, the price of gold will continue to rise. And that's why you're seeing it. Central banks are buying it up left and right. They know that they're debasing their fiat currency right now with all this printing, and there's certainly no plans to corral spending by any major government. You know, they're all ramping up to print even more. So as long as that continues, you're going to continue to feel inflation.
Wow. What about the reality that gold is priced effectively in dollars, and we may be looking at more rate cuts before we see rate hikes? I mean, given sort of the inclination, we'll see how this all plays out with the Federal Reserve. But in light of that, what does that also mean for gold prices?
Yeah, gold prices typically rise during a rate cut cycle, just because the cost of holding interest-bearing assets then decreases. So you know, gold should make out pretty well if they begin cutting rates, and that's why you're seeing gold up over $2,400. There's thinking that coming up here in September they're going to begin cutting rates, and so you saw a pretty good little pop in the gold price today, about 2%.
Yeah. What do you make of this sort of great divide, if we could call it that, that seems to be going on between the Western world and everybody else? And, you know, I was just looking at some numbers, and I'm sure there's more recent data, but I saw that in the first quarter alone, you had record numbers of central banks around the world purchasing gold. The U.S. is still the biggest holder of gold at Fort Knox. But nonetheless, the fact that so many other countries now are trying to do this, it just makes me wonder what sort of, in a more broader tone, right? Like this is sort of outside just the pure gold thing, but what's really going on?
Sure. So gold will give you control, and that's what these governments are realizing. You know, as with dollar as world reserve currency right now, you saw what happened when the Russia-Ukraine war started off. There were sanctions put in place by our government towards Russia, and you had a lot of other countries kind of, you know, look at that and say, hey, if we're kind of at the mercy of the dollar, that's an issue. And, you know, not to say that we're an adversary of some of these countries. We aren't. We're allies of some of these countries that are buying gold. But they realized right then and there that we don't want to be at the mercy of any other country except for our own. And if we're having to deal with the dollar as world reserve currency, we want to change that, move into something that's, you know, we have control over, which is physical gold.
No, it totally makes sense. In fact, I think it makes sense from that perspective. Even, you know, if you think about individuals that are trying to diversify their own investment holdings, one of the things that they look at, and actually I happily encourage. I mean, I say that I don't, you know, I'm nobody's money manager, but I do have certain core beliefs, and one of them is diversification. And part of the diversification strategy includes having some exposure to gold. But when you really drill down, even on that, like walk me through the ways you can do that, because you can buy the physical gold, which comes with certain advantages. Perhaps, you got to deal with storing it, et cetera. Or you could go do an ETF. But one of the reasons and I'll let you get at this, but I think one of the reasons you are buying gold is because if the you know what hits the fan, you know what? You want to be able to make sure that you're protecting that underlying asset that was there for diversification in the first place. And what is the challenge with, say, counterparty risk, ETFs, et cetera, versus the physical stuff?
That's a great question. It's a question we get asked a lot. You know, a gold-backed IOU is still an IOU until you have the gold in your hand. You know, you don't really own it. And you mentioned counterparty risk. That's really everything. Gold has value all around the world. If you have gold in your hand, you can go anywhere in the world, and that has value. There's zero counterparty risk there. If you have a gold-backed ETF, if you got to hope that someone is there to buy that ETF from you. You got to hope that the currency that they convert it into is still relevant. You got to hope that the bank that they're putting into is still in business. You got to hope that you can access those funds when you need those funds. You see, there's multiple layers of counterparty risk. There's three, four layers there that, you know, the whole point of gold is having an insurance policy. And if you're having to go through four, five, six layers of counterparty risk to get some value, that's an issue.
Hey everyone, I'm Trish Regan, and so happy to be coming to you live all week long from the stunning island of Ireland. Just incredible. You know, when I was a little kid and we'd visit here, my mom would say, if you're lucky enough, you might actually get a pot of gold at the end of a rainbow, because that's where the leprechauns leave it. So we looked, we didn't find any, but I consider it probably having been good advice, because as I got older, I learned that gold is pretty valuable. It's valuable in terms of diversification. I encourage you to take a look at it. And when you do, call our friends, our wonderful sponsors over at American Hartford Gold. You can go to trishlovesgold.com, Trish loves gold, and wow, it's windy here. You can text 65532, my name, Trish, to 65532 for your chance to get up to $15,000 in free silver, ladies and gentlemen. Just a terrific offer. Yeah, and I look at gold, I guess, not necessarily as something I'm trading in and out of, but as one of
Mhm.
those parts or pillars, if you would, in a portfolio that's there for the long term, right? So it's not
Mhm.
like, okay, it hit 2,300 bucks, I'm out. I'm like, actually, I'm like, I wish I bought more of it because it just hit
Yeah.
2,300. But the reality becomes, okay, this is part of my core holdings, et cetera. That's sort of, you know, the plan if all HELL breaks loose, which we certainly hope doesn't happen. But I'm sorry, increasingly, when you
Yeah.
look at what's going on in the world these days, you know, it gives you reason to have a bit of a pause. So I guess, you know, look, if you were quickly trading in and out, maybe you'd want the liquidity perhaps of an ETF. But I
Sure.
suspect a lot of the reasons why people are buying gold in the first place is to protect against that black swan event.
That's right. As the insurance policy to have as the diversifier, the hedge in their portfolio that stays there, and it's really the insurance policy. It's a benefit right now because it's performing very, very well. You know, gold's near the all-time high. It's up 35% since Joe Biden took office. So typically, your insurance policy should just be a good hedge, but it's actually making a nice return over the past couple of years.
Yeah, you know what's great about it too, in that, you know, you said it's up about 35%. I mean, you look at inflation, which is up somewhere around 33%. So, I mean, one of the points I like to make is that you have to actually allocate for this inflation risk, and we've had a lot of it. The other thing is that and I've showed you this chart before, I've showed the viewer this chart before, because we talk about gold a lot, regardless of you guys,
Mhm.
by the way. Again, we're
Sure.
thankful for your sponsorship, and you guys have a great offer. So I want to get into silver in just a second and ask you about that. But in light of gold having all this upside, people say, can it continue? It's one of the things you and I have talked about, but I've looked at these charts and it shows you, for example, gold versus the overall money supply. And back when
Mm.
gold had a more challenging time, you had a gold price that was pretty high relative to the overall money supply, right? Like how much money they've actually
Sure.
printed. And now you look at that and they're pretty dead even. So that
Mm.
tells me that it's a more fair valuation. If you look at a Fed that's going to cut rates again and we're going to have more liquidity injected, who knows? Then I
Mhm.
would suspect, to your point earlier, you would see an expected upside in gold that would at least help you keep pace with inflation.
Absolutely, absolutely. There's going to be a nice upside as they begin this rate cut cycle, and there's a lot of unknowns, as you mentioned earlier. in normal times, I'd say pre-COVID, there'd maybe be like one or two things to worry about. And right now we have 12 to 15 things to worry about in terms of war and in terms of the debt that we're running up, in terms of the upcoming election. There's just a lot of things on the radar that are a big unknown that, I read uh, countless articles every day just trying to make sense of it. And it seems that even the smartest people in the world have no idea what's going to happen over the next year.
Yeah. Hey, and,
So,
and you're running a gold company.
right,
It's-
exactly.
but no, there's a lot of things out there in the world right now. I mean, you look obviously at the political situation being in such dire shape. Someone said to me the other day, if Donald Trump doesn't win the election, they expect gold to just soar because the expectation then is like, okay, what happened? What happened if he, I don't even need to go there with you right now. I think
Right.
that it's important as an investor, however, to look at all of the political events through this economic
Mhm.
lens, and that kind of helps dictate where you want to be putting your money. And I think that the risk scenario, it's real. It's certainly real
Mhm.
from a global perspective, from a let's print more money perspective, let's spend more money, obviously, and print more money. The spending to GDP is unlike anything we've ever seen, and we're not
Yeah.
actually in a wartime. On top of it all, right? I
Yeah.
mean, it's going to
Yeah. Last
pay
time we
off
were here
kids'
is
college loans that may or may not have
yeah.
graduated.
Yeah, last time it was WW2 that was at these levels. And as you said, we're not really in a major war unless you count, Ukraine, Russia, and, what's going on in Israel, but we're not in a major global war. So
It's not us, though,
it,
right?
it's not us.
Technically, I
Yeah.
mean, who
Yeah.
knows? I hear some things
Yeah.
about, we're sending this, that, and the other over there, but it's technically
Right.
not us. So that's kind
Right.
of alarming. And then, look, I'm a big believer in a lot of Trump's policies, but I can't tell you that he's not going to keep spending or, put some pressure on the
Yeah.
Fed as he's literally said to me, they need to cut rates when he was in office. So, not that, I get that there's a Chinese wall, et cetera, but I look at the
Yeah.
scenario and I think there's a lot of vulnerabilities out there in
Sure.
terms of making us weaker on the inflationary front. What about silver? Let me ask you this because just a,
Yeah.
quick plug for American Hartford Gold. You can go to Trish Loves Gold. Nobody's going to forget that. TrishLovesGold.com
Yeah.
and check out this offer because you can get up to $15,000 in free silver, up to, if you sign on with them, which is obviously really tremendous. But let me ask you, what is it about silver now that's driving silver prices higher? Because is it being used sort of as a proxy for gold?
Silver is always a little slower to react, compared to gold. And we're seeing it get right back in line with where it needs to be with the gold price. Silver's up 50% since October. So it's catching up and catching up in a hurry right now. It's been undervalued for so long. And now we're heading to a place where, the inflation's finally caught up with the price. What's going on with the two wars is catching up, election uncertainties, and then just monetary supply. Typically, it has the industrial use. But now with everything going on, it's taken on more of the currency use, like gold has, is more of a hedge, more as a safe haven. So now that it's turned into more of the safe haven aspect, you're seeing it run up and catch up to gold.
Do you have any expectation? I mean, we got some recently, some rather more encouraging, I guess you could say, inflation numbers, although I think it's really amazing how everybody has amnesia about how this stuff adds on top of each other. So, hey, look, even if it's up 3%, it was up however much before, and however much before, you can go back to the
Yeah.
9.1%, right? That it was up 15 months after Joe Biden became president of the United States. And so all of this
Mm,
stuff is cumulative. But is
mm.
there anything that sort of makes you think, I mean, not me, but I mean, I hope it's not 9%, but I don't feel like we've got it under control yet. Your thoughts?
Yeah, great question. Look, again, as long as they're continuing to print money, Joe Biden came out with this $7 trillion plan. He says, if I get reelected, we're gonna do this, that, and the other. They certainly have no plans of cutting spending. And as you said, the money supply has a direct correlation to the price of gold and inflation. And as long as they continue to print, we're going to see inflation run wild. Right now, it has tamed a little bit. It's getting closer to 3%. The Fed wants 2%. But it is one of those things that begins to snowball that now the cat's out of the bag with the money printing. They're going to keep printing money. You're going to have to, as an employer, you're going to have to raise wages. Wages increase, then they're going to have to charge more. If you charge more, then that's inflation. So you're going to continue to see this cycle that cost of living is going up and up and up. Wages have to increase, and it's kind of, a push pull. It's going to keep happening as that cycle continues. Inflation is going to continue to stick around, and that's why the Fed has struggled to really get it under control, because all the money is still out there in the system, still in circulation, and people are certainly struggling to make ends meet. So employers are having to raise wages as wages increase. Obviously, consumers need to feel that, and there's your inflation.
Yeah, look, yeah, people are hurting. I mean, I get a lot of messages on the show about, look, my grocery bill used to be this, and now I'm paying that once a week, and
Sure.
it's the reality. And so I think when the administration tries to say, hey, we're doing great, and they point to a bunch of gobbledygook, it's like, no, 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 you're not doing great. Just like, by the way, Joe Biden is not in perfect cognitive shape. Like, I don't think I'm going out on a limb saying
Yeah.
that. But likewise with the economy, I don't think the economic policy that they've employed has had any success in terms of making life
No.
better for your average American. Don't forget, like, that is the intention, right? The Federal Reserve theoretically
Sure.
had good intentions. But do you think the Federal Reserve is just inherently messed up? And that as a society, I mean, hey, they want at least 2.5% inflation, right? They're even already saying, hey,
Yeah.
maybe you got to get used to interest rates around 5% for the foreseeable future. I mean, it just
Yeah.
makes the cost of capital so much higher. It makes the cost of everything so much higher. It makes inflation go into overdrive. Is the Federal
Yeah.
Reserve sort of misguided in your estimation? I love to pick on the Fed because they're an easy target, but I just don't understand
Yeah.
how on earth they could be looking at maybe cutting rates
Yeah.
again when we are confronting a real problem.
Yeah, that's really well said. You know, 2008, we were behind the eight ball. We had to cut interest rates down to zero, and we got addicted to this low rate environment and this quantitative easing. And ever since 2008, we haven't been able to pull away from it. And so, yeah, we're looking at 5% interest rates right now. That's typically been the norm. And so, for people to say, "Oh, the rates are so high, this, that, and the other," that's been, a historic norm. And the Fed has missed the mark. They were calling inflation transitory for a long time, and it's been here to stay. It's been sticking. It's been hurting Americans, and so it seems that the Fed's always just a little bit behind, or a day late or a dollar short. And my tinfoil hat theory, I believe the government does like inflation to an extent because it makes the debt worth less. You need to debase the currency to a point because it makes all the money that we printed, in the 80s, 90s, early 2000s worth less, less, and less. So if I can make the dollar worth less, then I can continue to print more and more and more of it. And it makes
I think that's actually really
big
important what you
impact.
just said. And I want to just take a quick second and expand upon that because
Mm,
that is, frankly, by the way, why all these central banks are also, not just because they want independence, but they're also recognizing, wait a second, the US can just inflate itself out of debt. How do you
yeah.
like that, China? We don't have to default. We'll just deflate ourselves, out of this debt. So it'll be worth effectively less, but there's more of it.
Mm.
Walk me through why that's bad for everyone else. I mean, I think it's bad for us too.
Sure. A lot of times wages don't keep up at the same pace with that inflation. So, dollars worth less. I see people that are like, oh, my stocks are doing so great. I'm up, 10%, I'm up 20%. I'm like, well, inflation's up over 30% in the last 4 years. So if you're doing the math on that, you're not really up. You're actually down. And so, the typical wages aren't keeping pace with inflation. And so middle America is really feeling it. The government's getting their way. They're making the debt worth less by printing more and more and more. I know that doesn't make a whole lot of sense. You're printing money and increasing the debt, but you're making the debt worth less because of the effects of inflation. But your typical, consumer, your typical middle America going to the grocery store, they're seeing prices increase like crazy, and their wages, they maybe haven't gotten a raise at work in, a couple years. So you're feeling the brunt of that.
And it's why I keep saying to everybody, you know what? Like, I don't care. I know it's tough. I know times are tight, but you gotta make an effort to invest. I just want to remind everybody, you can text my name, Trish, to 65532 or call 1-844-495-1115 because they do have a really special offer. You can get up to $15,000 in free silver by signing on with American Heart for Gold. Max Baker, thank you so much for your insight. It's really good to see you. And again, text Trish, 65532. We'll see you soon.
All right. Thanks, Trish.
Again, our thanks to Max and the entire team there at American Heart for Gold. Go to trishlovesgold.com.